Hi, I am Anna. I come from www.ntvforex.com. US inflation reflects COVID unwind analysis. http ntvforex.com news ID C0762E813 2027 am. Inflation has surprised on the upside, but we see this more as an unwinding of the strains caused by COVID-19 shutdowns rather than a signal there is a meaningful pickup in medium-term price pressures. NBSP inflation surprises on the upside. US consumer price inflation came in higher than expected in July, posting 0.6% month-on-month gains for both headline and core CPI versus 0.3% and 0.2% respective consensus expectations. This leaves the respective year-on-year inflation rates at 1% and 1.6%. After yesterday's firmer than anticipated PPI report, there was going to be some upside threat, but the scale of the rise in the core measure is quite a surprise. However, we see this more as an unwinding of the strains caused by COVID-19 shutdowns rather than a signal there is a meaningful pickup in medium-term price pressures. NBSP US inflation measures moving in tandem. Source macro bond, ing NBSP near-term yield curve steepening to continue. For example, apparel rose another 1.1% after the aggressive discounting of April and May concluded when retailers were desperate for cash. Likewise, transport jumped 2.9% and lodging away from home rose 1.2%. Hotels as people start to move around the country more and firms have a bit more pricing power. Meanwhile, gasoline rose 5.6% mom, reflecting higher pump prices as a lagged response to the recovery in the oil price, and car prices picked up 0.8% mom. With the U.S. Treasury seeking to sell $38 bn of 10Y Treasuries today and $26 bn of 30Y tomorrow, these higher inflation numbers and the recent softer tone to the U.S. dollar supports our debt strategy team's view that we see more curve steepening in the near term. However, we are not fearful of a meaningful rise in inflation over the medium term. NBSP little medium-term inflation threat. The U.S. is a service sector-orientated economy, and so inflation is predominantly driven by service sector factors. The biggest input to service sector prices is labor, and when you have more than 30 million people claiming unemployment benefits, there is likely to be a glut for quite a while. This will keep wage pressure subdued, thus limiting the upside for service sector inflation. We also have to remember that the economy is 10% smaller than it was in December, so there is a huge output gap that will limit the upside for broader inflation pressures, even if the dollar weakening trend continues. Today's inflation figure is a corrective move, but in our view the threat of prolonged higher inflation is limited. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.